large bucket of money that's coming in. The distribution phase is not occurring as before, and that's why I think the price target is a little bit lower. But I think these price targets of 180,000, 200,000 is just mathematically impossible, because it takes a lot of capital now to push Bitcoin higher.
Are you stuck holding NFTs that went to zero? Harvest.art is the original tax loss harvesting service for NFTs and tokens that will buy anything when nobody else will. Over 200,000 NFTs have been sold to the farm since 2021, helping users realize losses of more than $30 million. Sell your junk at harvest.art. Welcome in, everybody, to another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City, and we are watching this recovery play out, if you want to call it one. A bit tepid for now, but ETH at least moving north of that $4,000 level. A lot of people have been watching after the big sell-off and massive liquidation event. A lot of questions still swirling around what this recovery and rebound is going to look like. Certainly what remains of what was Uptober, up in ashes and smoke, and hopefully more room to run as we approach Q4. So excited to have on with us today on the show 10x Research founder Markus Thielen joining us. Markus, good to see you, man. Thanks for being on.
Yeah, thanks for having me. Glad to be here.
A lot of great research from you guys at 10x Research. Hopefully, I'm sure there are a lot of people out there still believing in the likelihood of a 10x perhaps from here in whatever bag they're holding. But I do want to dig into the recent reporting that you guys have been putting out, looking into, I think, a lot of the triggers for why we've come back to these levels. But how are you piecing together all of that right now as you look at the Bitcoin picture?
Yeah, it's a lot of position management, basically, right? We have on the one side a lot of the legacy wallets, the OG wallets, basically been distributing, since the summer. And we showed this in our research, really, that it's really the mega whales have been really selling to the whales, and it's really, they're not suffocating, the flow, they're not overwhelming it, but as much as the ETFs, can buy, it's really, that's how much the mega whales are selling. And that's why we are more in the distribution phase right now and sort of like going sideways. And on top, of course, we have the DATs, the digital asset treasury company theme, sort of like running out a little bit, which is sort of like a function of the volatility as we came into the summer. So the crushing of the volatility caused actually the theme to sort of like die down. And of course, there is a specific event in Japan, around the potential tax law. But of course, the other theme is, of course, that a lot of the institutional players are using options to cap the market, so to really generate more yield. So they're trading really basically covered calls. They're long Bitcoin, but selling options against it. And that's kind of like what's capping the market right now. And that's why we're in this sideways market. And people were just like massively, long over the last couple of weeks. The futures were massively long. And then, of course, with the crushing in volatility, we suddenly saw this, this spike or crash lower that we saw kind of like 10 days ago. And I think it's just kind of like a matter of people are over positioned, but then the market is really not catching up, and then everybody gets stopped out, and then sort of like we're trying to find a new equilibrium here. Mm-hmm. But I think we're also trading around very important technical levels.
Yeah, when we talk about very important technical levels and everything you just walked through, I know you had a few slides you brought along with you, and we always like digging into some of those, getting a little nerdy on the research side. And you're right. I think, obviously, a lot of people knew that the premium in terms of MNAV versus where some of these DATs were trading was eventually going to come down, and we saw it kind of play out in slow motion. And I'm just kind of curious. I mean, obviously, that was a big boost in terms of buying activity running too hot. We had Mark Yusko on the show last week talking about how, we didn't get to some of those blow off top numbers, I think, because of what you just described in terms of options activity and some of the basis trade maybe weighing on spot. But now that we didn't get up to like 140, going all the way down to like the 70s or 80s doesn't seem like where we go. So talk to me about kind of where you expect price to maybe recover here, and if you're still in the camp that we can hit 140 by the end of the year.
So we came into this year, more on the conservative side, even like the last couple of years. So we called the market, we called actually the low in October 2022, and we had like really, absolute spot on price targets into the halving. spot on price target, for end of 2023 and as well for 2024. Those were pretty much hit. But this year we came in a little bit, more on the conservative side because we don't believe the 4 year cycle, if it ever really exists anymore. I think there's a lot of changes that's happening, occurring there. But the way how we looked at it is really that we want to kind of really follow the money instead of following, wild price swings or targets. And I think here, when we look at, sort of like the actual money inflow into Bitcoin, and we extrapolate this money that has been flowing in, let's say since middle of the year, and we extrapolate this into year end, that kind of got us to a price target of like 140K. But of course, as we have also highlighted the last couple of weeks, it's going to be more and more difficult to achieve. And it is simply because of the money that's coming in right now. It's actually being offset, and actually the volatility or the band that we're seeing of inflows versus outflows is actually shrinking a little bit. So the large bucket of money that's coming in, the distribution phase, it's not occurring as before, and that's why I think the price target is a little bit lower. But I think these price targets of 180,000, 200,000 is just mathematically impossible, because it takes a lot of capital now to push Bitcoin higher. And again, I think when we have around 1.1 trillion US dollars that has been pumped into Bitcoin, into like a market cap of 2.2, 2.3 kind of like trillion. So there's a multiplier of a little bit higher than two. So that's why we can like calculate how much money actually needs to be flowing in. But again, I think when we look at previous sort of like cycles or moments when the 21-week moving average was sort of like challenged, that's usually kind of like the bull versus bear period, and then we are kind of like around 110, 111, 112,000 where this indicator is. And I think historically we have stopping out of this indicator has been actually a good period really to lock in profits. But we do think that the market has massively changed, and plus the fundamental side where we have about the US indebtedness massively increasing, especially since the big beautiful bill. I think the 5 trillion debt ceiling has already, I think 35% of that has already been used within 3-4 months basically, which was supposed to last for Trump's full presidency. We're going to get a dovish Fed chair and all these things. The economy seems to do fine. So I think it's very difficult to turn really bearish and really call for the end of the cycle. It's more that we probably have a little air pocket. So, we might bump around a little bit longer. We might test, 100,000, but I don't think we're going to go much below that level.
Yeah, I was going to ask that too, because you had another great chart here too, kind of on the same theme as, when to bet big, and kind of the difference between, and we're going to get into altcoins and what else, the other carnage that happened in altcoins and the liquidation event in a second. But just to kind of wrap up on the Bitcoin front is kind of when to bet big here, given the fact that, people come in at different price levels. They've got a different way of thinking around, hey, I'm in the green versus, oh, I'm in the red. And having some of these dips, so to speak, generally do. I mean, that's why, by the way, that Saylor and his DAT and MicroStrategy has been able to kind of pioneer this, is that you want that volatility. But I don't think, and we are hearing the same thing that you just said, is that like, look, for Bitcoin, sure, there's a little bit of steam coming out, but that doesn't necessarily mean the end of the year is going to be completely gone. So I guess specifically for this chart, Markus, what are we looking at here in terms of that? Is that the story? That, hey, you've got more people coming in buying the dips?
So this is basically, Bitcoin in white versus, the short-term realized price. This is the average price of, where people have been buying the last 155 days. That's sort of like the short-term trader. Usually when we kind of like are above this level, it's bullish, but when we retest it and sort of start to break it, then a lot of people sort of like are underwater and they say, let me get out of here, and then we get some liquidations. And then of course, when the market tries to rally back to that level, then all these people that were underwater kind of like praying, oh, if we ever get back to my entry level, I'm going to get out. So let me just get out, break even. That's why I usually act at some resistance. And when you can see from the chart in sort of like the 2021 and 2022 kind of like bear market really that started, if you have gotten out of that level, you would have really protected a lot of your profits. But as we also saw that, during the 2024 consolidation, and then even like in late Q1 this year, when we had, of course, the Trump tariffs issue, if you would have got stopped out of this level, you would have not seen the drawdowns into the, low 70,000s that we had. So you really protected your profits. And, we are trading a little bit below it. But I think it has really changed that there is a lot of buying still from the ETFs that are really kind of like supporting the market. I think the market has also become a lot more derivatives focused. So we look at the data very careful, and we're seeing a lot of a lot of call selling, but we're seeing also some put selling, and especially since the crash like 10 days ago, there's actually a lot of put buying. So people are protected if we're going to go lower. So there's no need really to expect we're going to see this cascading
Hmm.
liquidations, because we sort of like had it, and the market is relatively clean, I would say, at this point.
Yeah, it's interesting to kind of think about some of that. And I guess one more point, just when we think about the structure and health right now of the retail crypto trading camp, or perhaps even some of that spillover into institutions and funds that may have gotten a little over levered before the big liquidation event. One of those other pieces in terms of how people have been trading access to Bitcoin, as you guys kind of show in a few different slides, is through strategy. And kind of the idea, I think it was 10x Research that was quoted by Bloomberg in terms of the amount of money that's been kind of evaporated in terms of trying to play it through strategy. Just want to look at the strategy chart too, because overall we're looking at it right now, and year to date still technically in the green, about flat. But if you had come in kind of through the summer, when MNAV was much larger than it is now, you'd be down about 30%. So I mean, when you pair that with kind of this other slide, I think it's slide 2 from your guys' deck. When you pair that with kind of where people may have overpaid for exposure to Bitcoin, I mean, how do you kind of put those pieces together and say, look, even though this is where we're at in the chart, and maybe we've bottomed here, going forward, what kind of like dent do you see in terms of enthusiasm?
So, I mean, in the end, that's of course, people, the media always reports how much, MicroStrategy has been raising. We just heard a couple of minutes ago how much they have raised, or bought like last week. But those numbers have been, coming in basically since sort of like the May period. And that's kind of like where we identified that, Bitcoin's realized volatility is going to come in lower. And that was really also the peak when, for example, some of the MicroStrategy options we're sometimes trading at 150, 200% implied volatility. So the higher the volatility, the higher the potential return that people like look at it. It's sort of like like a lottery ticket, really, right? It's a highly geared stock lottery ticket in the sense. But if the volatility comes in, then it also means that the upside potential is a lot lower. And I think that's kind of like how we looked at it. And I think we've seen this, that it would allow them only to raise less and less capital, and that's kind of like also would kind of like keep Bitcoin in a tighter range than expected. But I think the interesting aspect is really that MicroStrategy shares sort of like hit a peak right after the Trump election, which of course was almost a year ago, and since then they have been sort of like consolidating, trading in a wide range. But there's not a lot of demand for the shares right now, and I think that's why they haven't really been able to raise a lot of capital. But they also have been relatively careful in not crushing the NAV too quickly, because once the NAV is back to sort of like one times or slightly above it, it's going to be very difficult to really get this machine going again to raise a lot of capital. And when you look, our theory is basically when Bitcoin became actually too expensive for most people, which was sort of like March, late February, early March last year. This is when Bitcoin kind of climbed above $45,000, $50,000 a coin, which is
Hmm.
sort of like the average entry salary in the US, which is sort of the average price of a car in the US. And I think that's when people sort of like looked at it and said, you know what, I want to buy, of course, a whole Bitcoin. I don't want to buy like, 5 ETFs or something, right? They want to buy the real thing. But I think it became like too expensive. And then that's when they switched into these proxies, notably like MicroStrategy, because when you look at the chart, that's really when the NAV really started to explode and the company
Hmm.
could really sort of like milk it. And as we showed in our analysis, MicroStrategy has raised around like 45 billion, but basically they've raised like 25 billion at an NAV, at sort of like one times, and another 20 billion at an NAV of, higher than that, really from, let's say, one times to three times or one times to two times. And, and we calculated that kind of that 20 billion that they raised, and looking at where the NAV is right now, and we're looking at the NAV, not at the MNAV, I mean, I personally prefer the NAV because it's the cleaner metric. It doesn't have a lot of debt in it and everything. But what it really means is that with an NAV, let's say around like 1.2 times, 1.25 times, wherever we are right now, that the 20 billion that has been invested, a lot of that money has actually been compressed, right? Because as you can see from the chart, most of the money that was raised was really around the US election. At one point in a 30-day window, it was like 15 billion that they raised. So they were really able to really monetize the US election basically.
Yeah.
But that had been compressed. So people have sort of like lost it. So they would have been better off just buying Bitcoin. Right. So
Yeah, I mean, the volatility of all this obviously is kind of how the flywheel turns. And when it comes to volatility, maybe it's a good segue into what we saw play out, I guess at this point, 2 weekends ago. But that was obviously a huge liquidation event, the largest there, and we're talking about a number near 20 billion. And there's a lot to dig into with this one, Marcus, because I tend to believe it kind of speaks to a little bit of shaking the very foundation of trust in crypto as kind of a crypto investor. And I don't want to say his name necessarily, but I think Gary Gensler had always kind of warned about the idea of what happens to investment inflows when some of that shakiness starts to rear its ugly head. And it's one thing to see prices go up and down. It's another thing to see 20 billion evaporated in basically a day. And a lot of questions around kind of how this happened, a lot of questions around retail traders who feel like they kind of got caught up in this to no fault of their own. But then again, if you're trading with a bunch of leverage, might be some fault of your own. And so I want to talk to you about kind of where you expect this to now impact alts, because if you think about the numbers in terms of overall market cap, we just spent basically half of today's show talking about Bitcoin. But when you move past just Bitcoin, that's mostly the result of what we're going to look at here in this chart in terms of market cap coming down significantly is really just alts getting spanked. And so when you put the pieces together, Marcus, what's your take on kind of what Q4 looks like in terms of this long-awaited altcoin summer that really has not materialized whatsoever?
So we have actually not bought into the theory that we're going to get a massive altcoin rally simply because we have around like 60 billion US dollars of unlocks occurring within the altcoin space basically per year. And a lot of the unlocks really, own or belong to, the early investors, yes, the protocol, the teams basically, but also a lot of the funds, really the venture capital funds that have invested. And a lot of their investors, their LPs basically have been, invested in the last cycle or maybe even the cycle before. And for them, they want to get the money back. They want to invest in the AI scene. I think when you look at like Google Trends, you can see quite clearly how AI is really dominating and outpacing, unfortunately, crypto. And I think because we don't really have this, specific use case scenario for the altcoins, which is very different. I mean, I'm sure you remember like last cycle, it was all, DeFi. It was so exciting. It was always this project or this protocol is going to replace, that TradFi company and so on. And TradFi had to merge into DeFi. I mean, that was all like really exciting. I mean, this cycle we just, debating, which dad is going to raise the most money. So where the most money is going to come in. But there's no real incentive really from, let's say, the retail investor to really, invest in a lot of the projects. And I think, one theory that I have was, of course, with the three silicon or with the three banks, right? The Silicon Valley Bank, basically, and Signature Bank and so on, they were dismantled. I think it was, and the Silvergate Bank was difficult, I think, for a lot of retail to really ramp into this market, right? This on-ramp has become actually relatively difficult. Yes, we're seeing it in stable coins, but I think overall, if there's no real buyer for a lot of those altcoins, if there's no real narrative, I think then it will be very difficult to attract a lot of the inflows. And I think, you mentioned the nearly $20 billion of liquidations, but you have to look at that half of them came from Hyperliquid. So Hyperliquid wasn't there in any of the previous liquidations. But the interesting aspect is really here that Binance had a lot of the, wasn't really that huge in terms of like net liquidations because they actually stopped out a lot of the winning short trades as well. And as you can see here, as in white is really the percent of long liquidations. Most of the exchanges have really like 90%. For example, Hyperliquid, nearly like 90% of all the positions that were stopped out were all long positions. and of course that makes sense in a crash, right? I mean, why would you stop at the short positions? But Binance is, arguably extremely low here, and I think the aspect is that they probably had to stop out a lot of the short positions to kind of like stop the market from a completely imploding, but also to protect the exchange a little bit. And I think that's where we're seeing how their insurance fund actually lost a lot of money. And that's something we have seen in the past with OKX. We have seen this with BitMEX, because the exchange has to protect itself. It cannot have like one-sided traders. I mean, somebody needs to take the other side. Then the exchange suddenly like closes out positions. But our understanding here is, as you can see, that Binance, the insurance funds lost $200 million nearly, which is almost like around like 20%, you can argue. And of course it has been built over time.
Mm-hmm.
And maybe it doesn't need so much money, but that's usually when the before your position is really going down to zero, let's say kind of like 3-4% below, they start to stop you out already, and then the basically the treasury team takes it over. And if they can unwind your position at a profit before it goes to zero, the insurance fund goes up. But obviously here with the $200 million in loss, it tells you that a lot of the positions were unwind actually lower than zero. So a lot of the accounts actually went bankrupt, and that just tells you that there's a lot of I guess a lot of the market makers that have the RV traders, relative value traders, the people that are trading hedge funds, basically being maybe short on one exchange, long on another, were basically like stopped out and had no idea where the positions are. And I think that's also where we're going to see somewhat maybe some disputes. There are going to be some puzzling, why we are stopped out here and we had another position on another exchange. And I think this happens from time to time, but I think it also means that people are going to focus more on understanding where the P&L is, instead of like taking like massive bets in altcoins. So I think that's going to be like an overhang for the next couple of weeks. And yes, maybe
Mm-hmm.
people are going to focus more on Bitcoin, but I think for the altcoins, it's going to be a very different story and very difficult right now to see how people rebuilding leverage there.
Yeah, I mean, it hasn't really played out in terms of if you had bought right after. I think some people may have been expecting a snapback after the big liquidation event, just because in general, maybe if you're down bad, you try and throw it back on, and you're going to make it back in one trade, and that worked almost. Solana re-topped 200. I always like using that. You talked earlier on the show about like key psychological levels. I think whether it's ETH at 4 or Solana trying to reclaim its 200 price level. That's another interesting one to watch, because it was quickly moved back down below that when we look at the chart here. And I do wonder if you expect, I mean, how do you see it playing out if that is true, if there is still going to be this structural overhang, if you are going to have disputes, if you are going to, like, do alts just trade sideways for a while? Because the other big catalyst, by the way, as we're all searching for one, is that potentially you could see the Solana ETF and all these other altcoin ETFs potentially get greenlit, but at a time where, okay, we just got shellacked. I'm not sure how much enthusiasm there is from net new buyers trying to come in, or maybe if you've never been allocated to crypto, maybe there is a case to be made that this is the time that if all of a sudden an ETF gets greenlit, that maybe you do throw some things in.
Well, I mean, I think the demand for anything beyond Ethereum, has been up until July, basically, relatively muted already. So I think it's going to be very difficult, I think, to bring a lot of people into the Solana ETF or any other ETF. So I think the big money is really going into Bitcoin. It's going into Ethereum. As we have seen. Of course, the Ethereum story also has been going sideways now for like 3 months, similar to Bitcoin. But I think Bitcoin sees actually a lot of the ETF demand, and it's just that there's this distribution overhang. But I think for the altcoins, I think that overhang is just going to remain, because there's no real story why people should invest in this whole theory about there's going to be this crazy period where suddenly all the altcoins are going to be bid up. I think they need a narrative, right? I think they need to really beef up their sort of like their marketing capabilities. And so far, it's been like relatively quiet, right? It's not about having easier trading facilities on hyperliquid to pump these prices. There needs to be like more narrative building, there more more stories to really bring in retail investors. But I think people got really scared, and I saw this when I woke up how the market crashed and it went really quickly. Um, but I think that's usually not the time when Bitcoin rebounds, unless there is like a massive catalyst, right? Unless there's for example, like Powell comes out and cuts interest rates by 100 basis points. But of course, this is a crypto specific event, and I think people are going to be actually a little bit more scared to put money into altcoins instead of really loading up on it. But I think some of the altcoins, or how we traded is, we faded, on Saturday, after the crash, we faded some of the, massively, high implied volatilities. We looked at, the Athena token, because, that we usually, was really hurt. So the dislocation in the Ethereum funding rate, which went down to like minus 40% annualized. Solana went down also to like, minus 200% even, at certain points. But I think it's really what we're seeing now, the normalization of those funding rates. It's going to be, the unwinding has happened. And that's usually, for example, where Athena, which was our top call after the crash. But for a lot of altcoins, we sort of like stay on the sidelines. And, with the rising Bitcoin dominance, the
Mm-hmm.
altcoin market was already on the back foot. I think it's almost like for 3 weeks now where the Bitcoin dominance is sort of like bottoming out. And that's usually not the time where you should, take massive bets in altcoin. It's really where you sort of like focus on Bitcoin. And I think that call would have protected you, would have, of course, had a 10% drawdown. But the aspect is, it's not just a Trump tweet at that moment, but I think we also went through like various technical levels. I think that sort of like caused a cascading effect, and one of them was, of course, the short-term realized level at I think it was back then at 1013. I think when we rushed to that, we quickly went down almost like 10,000 points, and I think that's
Sure.
sort of a lot of people had to stops.
Well, I know we're coming up on time with you. I know it's late over there, so I don't want to take up the rest of your evening. But I did want to maybe throw one more thing at you. That again, we didn't kind of expect to throw this at you because it's even new for us. But I mean, when it comes to that narrative, we just had Jesse Pollock from Base on. That is at least one overhang, and I guess I shouldn't use the word overhang. That's one catalyst that's sitting there when we talk about a new chain coming that has so much exposure, particularly for retail traders, just because it is Coinbase's ETH Layer 2. And, Jesse was on talking about what's to come. And certainly Zora creator coins right now, as coinage is one of the top in that ecosystem. It is interesting to think about, whether or not that could potentially become one space tied to a base token drop that is something that could catch retail traders' attention. And honestly, even people who are not in crypto. We see these all the time, whether it was NFTs before in prior cycles, or this time around, potentially creators issuing creator coins that get non-crypto people to actually put money into these things. I'm curious if you've taken a look at any of those, or any idea around Zora, as it kind of has on some days bucked the trend of being up when other cryptos are down.
Yeah, I think there are certain altcoins I think worth taking a look. So it's not that we bearish on everything. I think there are some opportunities. I think Jesse gives great presentations. I think he's doing a lot of work. I think he also gave a great presentation on token 2049 in Singapore. I think his team at Base really going around all these countries and being like very active to bringing more users in. I think that's something that can certainly move the needle. And I think it's really these airdrops. I think these where people got really excited. I mean, we're looking at the Hyperliquid airdrop. How that sort of like really helped really to drive that ecosystem, right? I think it came out. I think was it November or December last year, so it went very quickly, and I think it just helped build the community. But I think it's really these newer projects I think that are more promising, that have really strong VC or strong corporate backing, and not necessarily sort of like these older coins that have been around for for 5, 6, 7, 8, 9, 10 years, that sort of like lacking the narrative right now. So it's always about the new narrative, and of
Mm-hmm.
course Base I think is really one of the potentially future leaders in this space.
Yeah, for sure. And I would just point people too, if they haven't watched it yet, because it was our first stream on Zora, actually. But it was very interesting to get Jesse's take on that ecosystem and what's to come around Base. So if they haven't yet, I'll just point people to coinage.media to check out that interview, or on our YouTube page as well. But Markus, I can't thank you enough for coming on, man. I think this is the first time we had you on Coinage, but a pleasure and a delight to go through all of your guys' research and data there. That's what we try and do, is educate people, and awesome to have smart people like you on. So thank you so much for making the time, man.
Cool. Thanks for having me.
Yes, of course. That there, Markus Thielen, the founder at 10x Research. Our thanks to him, and our thanks to you all for watching as well on what was another day of AWS and all the internet basically being down. So appreciate you joining us. Maybe you didn't have anywhere else to go, to be honest with you. Maybe that was it. But that's going to do it for Markus, for myself, for everybody here at Coinage. We appreciate you joining us on these shows. We do these every Monday to kick off and look ahead to what's to come. And of course, as I mentioned, you can check out all the big headlines around the world of Web3 at coinage.media as well. And you can head there to learn more about co-owning our project here at Coinage to mint an NFT and become an active member and unlock a path to patronage dividends. If you haven't yet, go check out our Zora Creator Coin as well. That's going to do it. We'll see you again later this week. Tomorrow, we got the big co-founder of Netflix coming on for another stream as well. Mark Randolph, another Coinage NFT holder in our fam. It's going to be a lot to dig into. And we're talking revolutionizing media again. That's going to do it. We'll see you again soon. Thanks for tuning in.